You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And all this week we're doing our post-Obamacare and Obama tax series. And today we're talking about reallocating assets with tax advantage products with Ken Davis, CPA.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I am your host, Steve Savant, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain, and day 3 with Ken Davis, CLU, CHFC, CFP, and CPA. And for some of our retail audience that's watching that's certified financial planner, certified charter consultant, and certified life underwriter.
Correct.
We are bowing to your credentials. Oh my goodness. I mean, anymore, the alphabet's going to have to change. What can I say? Well, if you missed Monday and Tuesday's attempt to be politically neutral.
Attempt. Good
It
word.
was an attempt. I think we did our job. We're just trying to talk about the impact of Obamacare and the sunset if it happens. We're just trying to get you aware of it now. I don't want you to be sitting here in November trying to figure out how to make this happen for your clients. That's why we're advising you now. We're talking to you about 1040 impact. And it isn't just the wealthy, as we said yesterday in our show. This is, talk about trickle-down theory. This thing is trickling down to normal Americans. The middle class and seniors are going to get smeared by this, and I'm just bringing it to your attention. Now,
Well, and I don't know whether you saw it or not, but one of the major accounting firms did a study on what they believe to be the impact of this increased 3.8% Medicare investment.
and it was a
tax.
big firm.
One of the top 4 accounting firms, internationally recognized, was 710,000 jobs lost because of that tax, 1.3% decrease in our GDP, our economy, as a result of this, plus some other nasty things. So if you're going to say this is just hitting the rich, no, it's going to hit everybody because jobs in our economy hurts everybody, not just the rich.
Well, there's no doubt in my mind that we need to really bring some full disclosure to what's happening here with the impact of Obamacare and the possibility of the complete sunset provision that's happening at the end of the year. I mean, this could be huge. Now, usually when we talk about this, we don't want to always talk about, well, here's the problem, it's a challenge, and have no resolution or solution.
Right,
and
right.
we have it. Now, again, not to paint our own wagon here, I'm just talking about 1040 results on your taxation. We only talk about how it impacts the consequences. How much money do I have left to spend? And when I'm talking about retirees, seniors, the ARP nation, I want to be talking about actual cash flow that I can take home and keep in my hand.
Right.
So Ken, you've been looking at all the tax advantages that are out there, and there are a ton of ideas. And we're going to get to that, tomorrow and Friday's show. Let's introduce the whole thought of tax advantage, though, because I don't think everybody understands this.
Well, what's interesting is my observation of people is they tend to look at what happened in the last 5 years. They're looking through the rear view mirror, and they're making future decisions based on what's going out of the back when they should be looking down the road. And what's interesting is, through the Reagan years and some of those early years, we actually reduced tax rates. We cut it back and went from a period of time when I was a CPA where we did a whole lot of tax planning. Well, then when tax rates declined and got flattened, the use of tax planning became less important, and people focused more on making money and less on spending time with their CPAs, reducing their taxes. Well, as we raise tax rates again, we're back into that climate again. And so some of the old things, we need to pull them out of the closet and dust them off. And one of the main things that we're going to be talking about is what we used to call a split annuity or a combination annuity, only we're doing it a little differently. And we did talk about this in one of our show for more of the middle class, which is taxation Social Security income, which is a huge benefit to those folks. But what I started to discover with the new tax maximum rates going from 33 to 36 to 39.6.
39, wow.
Raising the AGI limit on deductibility of medical expenses from 7.5% to 10%. Raising Medicare premiums based on adjusted gross income. This is a benefit, a cost of a benefit based on a tax concept. So they're now crossing over the line into Social Security and Medicare type benefits now I started to realize that these concepts of using split annuities and tax deferral and life insurance and all these tax advantages can now be applied to a much larger segment of our population. And so now we can reduce the Medicare premiums, we can reduce this new 3.8% tax, we can reduce the 39.6 to 36 or 33. Okay, so now all of a sudden, this concept of using combination annuities or split annuities or even life insurance when the cash flow isn't necessary can really do some substantial benefits for the wealthier of our clients. And of course, if they are middle class, then we can reduce the tax age Social Security. So suddenly these concepts of our products become more important than ever.
Well, now, Ken, the idea behind this is, especially on annuities specific for some remote, is the power of deferral.
Right.
Right. And I don't think, and I have a doc on this. If you say, Steve, I'd like to see your one pager on this, you can just write me at thebiz@brokersalliance.com and I'll be happy to send it to you. Every time we talk about annuities with one of our clients and we're doing live retail, helping another one of our agents out, I always send that to the client so she understands the power of tax deferral. That power or that delay, right, that stall, remember it's not elimination, it's not exemption, it's just delay. And that power can be significant, especially when you don't need to construct a receipt of income. That's what I think is powerful. And I just want to be able to say, Ken, you know, when I think about it, we're going to be framing on the second segment the ideas that we just did our show last week on some of the power of tax deferral and tax-free income and the impact even against 401ks, but especially because of the impact on Social Security. Our goal is to try to keep Social Security its original intent, which is originally tax-free, and it isn't anymore, it's taxable.
Right.
When we come back from this segment, we're going to talk more with Ken Davis. We're going to talk about some of the solutions he uses, combination annuities, split annuities, all kinds of ideas with life insurance. We'll be right back.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. We're here with Ken Davis, CPA. We're talking about solutions to the Obamacare and maybe Obama taxes because of the sunset issues.
Right.
And we're talking about that. And I want to bring up one thing. We talked a little bit about annuities. We kind of introduced people that we're going to talk about annuities and life insurance, and we've changed the planet on this whole idea. But I want to talk, before we get into it, on chronic illness, because here is and I want to say it looks like a tax-free deal, but it kind of is because of the way the law treats chronic illness and linked benefits. Talk about that a little bit.
Well, yeah, and I'll point our viewers back to our show on split annuities, and that was focused on Social Security because some of the concept and detail that we did there. But basically, if we attach a long-term care linked rider on the annuities, then now when we're taking that income out, instead of being taxable as income, it's tax-free. Okay, so that's a way to add an additional benefit to the annuities. Furthermore, when we do the layered annuities, while it's true it's all tax deferral, we do, by layering it, we can essentially defer it potentially all the way to the time they pass away.
Now let's just walk through that just for a second because I think it's an important distinction. So let's say I have money and I put it inside an annuity, right? You said I put it inside it. If I put it inside the annuity with an LTC rider, I'm thinking of a company right now, but since they didn't pay us for a commercial, I'm not going to say the name. But I'm thinking about that, and so when I take the money out, and generally people are looking at more of the indemnification, not the reimbursement tactic. So when I take money out and I trigger it, that money's coming out tax-free. Now, if I had money in a previous annuity, could I 1035 it to that annuity and still do what I just said?
Yes, and in fact, I just realized that in a way it still is tax deferred. We're able to take it out tax free. It reduces our tax basis when we take those distributions. So the assumption there is that at least up until the time we pass away, we won't use up all of our tax basis, but potentially it could, and then it would trigger tax. So it isn't totally tax free. It's still a deferral concept. But if we can push it all the way to the time we pass away, we never during our lifetime paid income taxes. The kids, when they receive the benefit, will have to pay income taxes on it. And that's why we want to include life insurance. When we're talking about people needing income and protecting Social Security income, those folks are more in the middle class. As we get into the wealthier clients, the people that are making more money, now we can start thinking about using life insurance because they may not need the income, and now they're looking at legacy planning. But even with that, when they do legacy planning, it's like, please take care of me too. I mean,
but
make sure.
Define legacy planning so everybody, all our listeners understand.
Well,
what you're
legacy planning is basically life insurance. Is instead of building wealth to live on while you're alive, is to leave more to the kids or your heirs. And so life insurance does a much better job tax-wise with that. And we know that we can design it to max the death benefit, or we can max the cash value and still have a decent death benefit and have that safety net that they can live on, and then we can throw the chronic illness rider on that at the same time.
Well, now, Ken, I just have to bring this up right now. You are a CPA. You're using the word life insurance out of the same sentence. I want you to just give us about a 30-second mea culpa on how you finally came to this determination, because honestly, when you think about it, right? I mean, most CPAs, as soon as I say annuities and life insurance, they run for the hills. What did you do in your journey? You must have taken a journey and made a change here.
Well, yeah, I remember very distinctly. I was taking my CFP course on life insurance, and to be honest with you, I had had some really bad experiences with life insurance agents, and I thought because of my experiences that life insurance was bad. And I had a very strong feeling about that. In my CFP course on insurance, which was the last one I took.
But Ken, can I just? I know you're trying to be kind here, but I believe the word is hate. I believe the word you used back in the day was, I hated these guys, and therefore you personified your hatred onto an inanimate object like life insurance.
Well, yeah, and I've grown and I'm more mature today, and I know it's not a good thing to be hating people or things. So anyway, the point is that I did.
I think I was one of his target audiences in that. I'm just saying.
Anyway, I realized that it wasn't life insurance was bad. It was that the life insurance that I had received had been designed improperly, and it wasn't the right thing for me. And I think the thing that disgusted me even more is a life insurance agent sold a life policy to my single sister without any kids, and she got cancer, breast cancer, and she was dying from that. She should have had disability insurance, and she didn't need life insurance. There was nobody depending on her. Okay, if she'd used that money for disability during that period of time, she would have had the pressure of all the bills. She was self-employed, she was a psychiatric social worker helping kids dying from cancer in Long Beach Memorial Hospital. Here she is doing this wonderful things for these kids dying from cancer, and she got really poor advice. I got poor advice, she got poor advice. The fact is, when I took this course, I realized that life insurance can be used very appropriately. And then along the way, when I met you and you tutored me initially on life insurance on how to design it to maximize cash values and minimize taxation, then I realized I had already gotten to the point where I could see the value of life insurance. Now I saw the cash value of life insurance and how wonderful the tax benefits are. And I wish more of my CPA colleagues would let down their guard and open up and start to realize when life insurance is used appropriately, it's a wonderful financial asset. Unfortunately, a lot of people, either through ignorance or intent, have not done the right job for their clients. And hopefully through these series, we can help them use them appropriately.
And we want to wake everybody up to these products, because these are some of the products that are going to mitigate the taxation issues that we're talking about post-Obamacare legislation and the possibility of the sunset provision. So we're just trying to educate our people, keep them up to speed on what's going on. You can watch all our shows on this subject all this week at www.brokersalliance.com. As soon as you come on our homepage, hit the on-demand button. That's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.